answering your questions about retirement. It's Money Talk with Michael Eastham.
My husband and I retired earlier this year, and I'm wondering if we made a mistake because our retirement accounts are down quite a bit. What can we do at this point to fix it? Neither of us wants to go back to work.
Well, it sounds like you may have a little bit too much exposure to growth investments, or even if your advisor says they're moderate or conservative investments, they could still be more allocated towards growth than income. And one of the things that I'd recommend that you do is to take a look at how much income you're actually able to spend from the organic development of interest and dividends from your current portfolio. If that amount is lower, then you'll need to take a deeper dive as to the investments that you have and see if it makes sense to make a shift. And the reason I say that is because the average dividend or dividend payment from the typical common stock or mutual fund could be 1 to 1.5% if you look across the entire S&P 500. So those Fortune 500 companies on average. And if you're paying an advisor a fee of maybe 1%, well then that means that you're only able to spend 0.5% of interest. So if you have $100,000, for example, then you can only spend $500 confidently without spending principal. Not only that, but typically with mutual funds and common stocks, you're going to have to sell shares. And so if you needed income from your investments now, like you said, your investments are down, well then you're going to have to sell at a low price point, and you're going to end up selling too much principal. Now, conversely, what you can do is, because yes, the market values may be down on your common stocks. However, interest rates and dividend rates on other income generating investments are actually higher. So even though you might take a hit on the principal, if you shift to some of those dollars to more sticky or true income like interest and dividends, then some of those investments are actually paying a much higher dividend. So you may be able to make up some of the loss in the form of income, and it won't be as much of a hit. Of course, the details we'd have to work out by looking at your actual investments, taking a look at the actual risk exposure that you have, and seeing if it makes sense to make that shift now as opposed to wait just a little bit. So I would recommend that you reach out to me and that we have a phone conversation so that I can get a little more detail about your exact situation, and then perhaps help you make an informed decision about what the next step might be for your retirement. You only retire once. I want to try to help you keep it that way. Thanks so much, and I look forward to talking to you soon.
If you've got a financial question you'd like to have answered, click on the link below to submit your question. You may hear your answer on an upcoming edition of Money Talk.